Yo, good morning, everyone, and welcome to the Morning Market Report. I am Army Piper, and this is the Piper Academy Network, guys. We got some GDP data come in this morning. Was not as bad as they expected it to be, but it was, still down from the previous quarter. My problem set with the whole thing is that it was a negative GDP in comparison, so a slowdown of growth, we'll call it, for October, November, December. It's the final quarter of 2024, and guys, that's when people are buying all the Christmas stuff, and we still had a slowdown of the quarter. So, yeah, that's the data that came in this morning, guys. Gold at a record all-time high right now. The markets are absolutely pumping on gold. Hence today's thumbnail. We're going to talk about $3,500 gold target from the, I think it's Bank of America. We're going to be looking at that, looking at tomorrow's data that's supposed to come out, and breaking down the charts for you guys so that you guys can have some knowledge, because knowledge is profit. Let's go ahead and let's get it going. You guys know what time it is. Class is in session. Good morning, everyone. Welcome to the Morning Market Report Show. Thank you guys for being here. Appreciate all of you. You guys are why I get up every morning and do this show right here. My most loyal people in the entire space are in this chat right now. I appreciate all of you. Oh, Jim Cramer. We got Jim Cramer in the house. We got BC Port Corp, Dusty Hunt. Delicious coffee. Brumblebee David Brumbelow is in the house with us. Precocino Dinero. Who else we got? Alexandra G, the mod queen. Buck's in here with us. Crypto Chef, make me something good. I appreciate you being here, bro. Wayne C is in the house with us right now. Who else? We got Crypto Coin Mindset. Keith in here hanging out and chatting it up in the chat, guys. Appreciate y'all being here. Hey, there's a new emoji. Did you guys see the new emoji? We got a new emoji. It is now Gypsy. My dog is now... There we go. Let's get her in there. Perfect. Bam. Bingo, bango. We now have Gypsy as an emoji in the chat. So, Piper, have you given any thought to my thought on us running ahead of schedule and leaping ahead or backwards? I think it's a good theory. I would need to dig into it more to, give a solid assessment. But I think it's a good theory. I mean, I absolutely think that we ran into the cycle early this cycle. We made an all-time high before the halving even occurred. And then what happened? We dumped back much sooner than we typically do. But a lot of that could be strictly because we do have more exposure in the space from retail TradFi money, right? Which caused it to, get that institutional move, and they're reacting to crypto the same way they do the stock market on a much more defined basis, right? And then on top of that, you've got contracting economy, which Bitcoin's never existed in a contracting economy. So, matter of fact, crypto has never existed in general in a contracting economy. So, shrinking economy and crypto, they are not familiar with each other at all. But let's go ahead and let's bring up my co-host here, guys. OC guy. Let's see what he thinks. OC, what are your thoughts on the whole theory that David Brumbelow has? You haven't been able to read it, but he has this whole thing about us running either ahead of schedule or leaping ahead or backwards, like that the cycle norm benchmarks of time have been shifted in the market. What are your thoughts on that, man?
I do have a strong position about it, and it divides in two sections. One, it's I don't really think that we have shifted on the cycle, but, and this might come with a little bit of a caveat here, but I do think that we are shifting on the reaction. So basically, if you just take a look at, but by the way, just to wrap it up, I agree with you that we are shifting on size and also on how early and late we start moving, because I believe that we could be into a extended cycle. So basically, we are just at this point so into the market cap that the cycle gets diluted with a big range in where we are at this point, and that is based on the growth. If you do not use logarithmic in your charts, you'll see that the very first pump, it's minuscule. It's just like tiny itty bitty, right? And then you compare it to the next cycle, and it changes 4 times in magnitude, right? You compare then to the next cycle, it changes 3 times in magnitude, right? So if we just follow that pattern, well, at this point, we should be going to maybe one or twice orders of magnitude. And that means that this range that we're having, or this retracement, to
Mhm.
cover the whole bear position for the early cycle. So I believe that we still have a movement to go, or a short-lived bear market, and then another early bull run that breaks higher highs.
Okay, yeah, I can go with that. I do think that we're going to have some more downside. I'm looking at a target at like $67,000 this cycle, this bear pullback, right? Whether it be a macro correction, or whether it be something along the lines of like, yeah, we shifted and now we're heading into the crypto winter early. We'll take a look at some of those charts and why I think those levels here in a little bit. But let's go ahead and jump into the news. Let's unwrap all of this data that we got this morning on the economy side, and let's talk about a couple of things over there, and then we'll come back and take a look at that chart, guys. Right now, we do have a little bit of movement here on Bitcoin, so I don't want to miss that. We're getting some support levels, but let's go ahead and jump into this. Current crypto market cap right now sitting at $2.832 trillion right now. The trend line for that is 3.62 trillion. That means it's the mean. That's the mean average of the crypto market cap, right? We're currently about 22% undervalued, 21.99 to be exact. Looking at the current risk levels, guys, we're at the 50% risk level. This is our DCA plan. You know, as you go down in these color bubbles, we DCA even more. And then when we hit in the 70s, hitting these oranges and reds, we take our profits out and we run. DCA plan, the Piper plan, DCA with an exit strategy to take your profits off the table. Right now, currently, Bitcoin dominance, guys, with stables is at 60.78%. Without stables, 66.13. Let's go and check out the fear and greed and see how that's looking for us here today. Let's get that going. Fear and greed currently right now sitting at 40. We are in fear. So the markets are fearful. Oh no. Looking at the daily crypto bubbles here, a little bit of mix here on the hourly though. We are starting to see some green pop back in on some items. Looking at the Bitcoin total right now, sitting at 86,648 on the daily, down 0.6%. So Ethereum's down 1.3%, XRP down 3.8%. Yikes. BNB is up 1%. And any big movers? Let's just go down here and look. Toncoin. Holy cannoli. Holy balls. Holy balls. Toncoin is up 8.6% today, guys. Moving up 3 spots to number 12 there on that list. What else we got? 5% to the upside on Sui. It's up 2 spots here to number 16. Shiba Inu's down 5.7%. That's a pretty substantial move. And yeah, that's about it on the top 20 here. Let's go and check out the stock market right now. Give it a refreshy fresh. Want to make it fresh here. Let's go. Here we go. Dow Jones is down about 0.17% right now. The S&P down about 0.17%. Also, NASDAQ's down about 0.3%, and the Russell 2K a little over 0.5% to the downside, while the VIX still below 20, but turning green. So be aware, be aware, be aware. Don't be scared, be prepared, and be aware that that VIX could cause us to have some more moves today. Let's go look at the bonds. 10-year Treasury yield bond moving up 4.36%, and then gold, guys. Gold is at $3,049 right now. It was at $3,050 earlier, I believe. But yeah, got an article today. We're going to be talking about the possibility of $3,500 gold. So $3,500 Bitcoin. No, $3,500 gold this year, guys. Silver is up right now today. Copper, platinum, both to the downside. Palladium up 0.76%. So let's go and check out the economic calendar. Sir, I'm going to need you to quit doing that. There we go. GDP growth rate, guys. This is what we got this morning. This was the big one today, hence the red block, right? It was at 3.1% previously. Forecast and consensus was that it would be 2.3. Came in at 2.4. And so this made everyone at first go, oh, look, it's higher. This is good. But no, it was higher than what they forecasted, but it's still shrinking. It went from 3.1% growth for a quarter to 2.4% growth. That is a slowdown of growth, right? Looking here at the corporate profits, this one's pretty interesting, guys. Corporate profits was down negative 0.4%. They forecasted it was going to be even worse. Came in at 5.9%. They are sitting on a lot of cash. What does that mean? they've slowed down spending. I did a whole thing with ChatGPT and said, let's try to wrap our brains around this. On this corporate profits here, and it said quarter over quarter profits fell by 0.4%, despite an earlier estimate showing no change. This marks a slowdown following a strong 3.5% in quarter two. Undistributed profits companies keep rather than paying out were flat, a sharp drop from the 10% in quarter two. And then net cash flow inched up by 0.4%, much slower than the 4.8% growth prior. And then companies also that pay dividends, they slowed down. They declined by 0.7% on how much they're paid out in dividends right now. So year over year, profits were up by 5.9%, but this too was revised down from 6.4%. So what does this mean? Corporate profitability is slowing after a strong quarter two, with less money being retained or paid out. And weaker cash flow growth. Year over year gains are still positive, but less than previously estimated, signaling cooling momentum in those corporate earnings, guys. So, what does that mean for us, the people? It means that those companies are starting to see a slowdown on what they're making financially, and that means that their stocks are going to continue to slide on top of all of the fears of uncertainty. You want to see corporations showing strong profit margins and calls have been getting downgraded left and right here for target prices on stocks, what the companies think their earnings will be in the next quarter, so on and so forth, end of year earnings, all that good stuff. So right now we're seeing a lot of that pulling back. The projections of what they say they're going to earn is coming down. Target prices from analysts are they're bringing those down. And let's bring Tesla down. Let's bring Walmart down, so on and so forth. And then to top it off, you've got the actual profits that they're showing on this report, saying that it's got a little contraction too. So that is going to cause, on top of the tariff scares, which we're going to talk about here in a second, that's going to cause a lot of sell off here. OC, would you want to invest in a company that showed that their profits were slowing down, or would you wait until you get into like a good target range? Would you do your technical analysis and go, this thing's going to pull back probably to consolidate in this area, and that's where I'm going to trigger my money? What are your thoughts on that?
Oh yeah, absolutely. First of all, I mean, when I do that kind of analysis and I try to make my best on that case scenario, I look at it, what is its max profitability, right? Then I look at its competition. Like it's just like seeing, for example, two bottles, right, of Coca-Cola, each one representing one different industry, right? Or but with similar industries, sorry, two different competitions, right? One is half a production, right? And then the other one, it's at the top. Which ones you're going to be buying? Most of the people are going to be, hey, give me the one that is already producing, the one that is at the top, right? But there's a
Yep.
little caveat here that it doesn't have room to grow, right? So, I mean, I usually go by invest the one that is half the way, right? But the main thing here is that we're not talking about just Coca-Cola. We're talking about main production. So I agree completely with you. Take a look at what was its max production, right? The CEO, right? And then what change lead to a lesser of a production. Take a look at if that replies on different industries. And if that replies on different industries, I'll hold my horses. Why? Because
Yep.
that means that the oil industry overall is just decreasing, right? Not only that company. If then I see that it's only that company, I'll see when or if there are any chances to change the CEO, or the direct board of directors might have some other plans with my direct back to what the other ones are doing. If that is the case, I'll just invest on that lesser growth of an industry. But overall, I'll wait and do my analysis.
Awesome, and that's a great point. So shout out to Alex O Crypto in the house, the otter gang. Drop those otters in the chat. No, that's a great point. That's why so many people like Warren Buffett are sitting on this massive amount of cash. They're looking at picking up these levels. Now, obviously, they are. He is, he took profits on the way up and then took heavy profits, right? So he still has exposure. It's not like he's completely out of the markets, but yeah, you want to make sure that you're hitting, those key levels on the way down, and those are your buy-in points. But you don't want to ape in all at once either, because if it continues down, then you're just going to be in negative. So there you go. Shout out to Not. What's up? He said, can't thank you enough for your help with Chart Prime, dude. We chew. All right. Appreciate you, bro. And Piper, you rock too. As a caveat, Piper rocks too. That's okay. All right. Hey, guys, over here. Yes, this is the video this morning that BC Port Corp did. If you guys aren't tracking, it says GDP data is this week's market mover, and this was his video this morning. We are doing a giveaway. Him and the Morning Market Report, Good Morning Crypto, and the Morning Market Report are doing a giveaway for the Billy Goat Tells children's books, 1 and 2, and then I believe he said he's doing a second one. But anyway, guys, one of the giveaway criteria is to go and leave comments on that video. There are none there. So let's go over here. Let me see if I can get this up so I can share this video with you. There we go. Let me open it here. Open Sesame. There we go. Details. Alexander G, can you go grab this video link and drop it here in the chat for me, please? Or any of the mods. I appreciate you. But yeah, drop that in the chat and we will get that going there for that giveaway. We need comments on that video. So go leave us comments and win yourself Billy Goat Tells children's book series right here today. You can do it. You can do it. All right, let's go talk about this article here. Analysts warn Bitcoin's recent rally may be short-lived. Amid market volatility, okay? So Bitcoin's recent price recovery has investors cautiously optimistic, but volatility remains a concern. Spot Bitcoin ETFs have seen 9 consecutive days of inflows, signaling growing institutional confidence in the asset. Analysts warn that market volatility, especially due to upcoming tariff announcements, could halt Bitcoin's momentum. So moving down here, despite that brief uptick, analysts are warning that the upward momentum may not last long, guys. So Bitcoin's price has recovered 2% over the past week. The gains have more than doubled over the fortnight, with the coin appreciating by 5%. At the time of writing, the cryptocurrency was trading about $87,381. Currently, right now, a little bit below that. Spot Bitcoin exchange traded ETFs have also seen inflows for 9 consecutive days. Since last Friday, the ETFs have collectively attracted $944 million in inflows. At the end of the day, though, they do believe that that this could have another pullback to lower levels, which we've talked about $67,000. So, Zinzin Regen, what is up? Appreciate you being here. It's from the Chart Hackers. So shout out to the Chart Hackers in the chat right now. In the latest Cryptocurrency Compass newsletter, research for Fairlead Strategies predicted that Bitcoin's relief rally could persist for another 1 to 2 weeks. However, founder Katie Stockton warns that a price drop may follow, which means, guys, may not be done. It doesn't go straight down. It does a little, there's some lower highs and lower lows in there, and that's what they're saying we're going to see. Despite the bearish outlook, Stockton acknowledged short-term positive. Bitcoin's near-term momentum has improved, and the price still has room to rise before hitting overbought territory. This could potentially trigger a phase of consolidation or digestion. This means that Bitcoin's upward momentum might slow down or pause for a longer period as the markets adjust. Right now, they're talking about some levels here. Selling pressure around $89,000. We've seen that over and over and over this past week. And then buying interest is around $85,000. That's the demand, right? And so if we jump over and we check out the chart, you'll see $88,000 here, 88 to 89,000. This is my 50% fib that we've been talking about. And this has been just a great opportunity over and over and over for rejection there. We did get a bounce down here, and that is on Chart Prime's dynamic reactor. One pickup here last Wednesday, one pickup here, or yesterday, and then one pickup here today, both on this dynamic reactor. Hence why, this little range here being played like a hot dog. There's your bun. There's your other bun. There's your hot dog in the middle. And Alex O, that's why he's schlonging. That is his analogy there for the hot dog bun right there. And he's just playing the buns, guys. Playing with the buns over there. Alex O, that is why he schlonged on this level of the dynamic reactor, picking up a bounce point. We do have money flow kind of flat right now. Volume is coming down, though, and the oscillator ribbon is pushing to the downside. I'm going to save some more of that 4 hour and talk talk about those levels for OC, but I want to show you over here on the daily right now. We are rejecting on the predictive ranges. This is your lower gold band from chart prime indicators. Typically, we trade in between here. When we get beneath this, then we have to assume that we're going to continue to test these bottom bands now, right? So we've gotten all of our rejections here for 4 days off of this level. We are beneath the dynamic reactor there, and you can see if I bring this up, we have had this nice rejection on the quantum reactor. Now it has collided there with the dynamic reactor, and now we're getting this double rejection point, setting this up for more downside. It does look like the histogram on the MACD normalized, starting to turn over, and we're starting to get some curvature here on the signal ribbon. We are starting to curve here on the daily oscillator above that 70%, or actually above that 55% range. We can go much higher before we actually start to fire the other indicators here. So if we got a break above this level, I'd be watching for about $93,000 to $94,000. But as long as money flow is continuing down and we're starting to get these Heikinashis showing weakening of that trend on the Heikinashi RSI primed, then it's very likely we will see this come back down to at least this $80,000 range. Why do I think that we could be looking at a level here of about $67,000 for our downside move? It's going to be because of this fixed range volume profile right here. This is, if I pull this one, this is a long term going back to the bottom of the bear market. Back here, this is our bear market bottom back in 2022, and you can see coming in right about 63,000, we have a value area high. If we go and we look at the short term, this is going to be from the last move that we had after consolidation before. That one's coming in at about $67,000. So if I throw this on here, you'll see that in this range here to here, that is going to be the value area high from the entire bull run cycle thus far. And then for the local from our last consolidation period here up to now, that box is going to be coming in right there on the point of control to the upside value area high from this previous longer range fixed range volume profile for the bottom side. That box currently right there coming in at 67,376 on the top, 63,300 on the bottom side. And that is going to be the level to watch, in my opinion, during this pullback, consolidation, distribution, whatever you want to call it. That's what I think we're going to be seeing there. OC, let's break it over to you. Let's see what you got there, what you're seeing on the 4 hour. I'd love to know what you're thinking about some of those lower levels. I will point out before you jump into that, forgot to mention this, that we are seeing the heat map with billions of dollars in liquidity sitting beneath us as a target. So if we get down here to like this 84,000 to 82,350, guys, there's about $2 to $3 billion between our current price and down there in liquidation lines. Yes, there's a one up above us, but there's a lot more down below us. You can see how hot that range is down there. So, OC, let's kick it over to you. Let's see what you're seeing. And is those $83,000 marks that we're seeing there for liquidity and liquidation heat map in your charts? Let's go.
Absolutely. In fact, if you take a look at my charts here, despite all the spaghetti that we are seeing, and yes, the obvious line that I was talking about here yesterday, which, by the way, it is already invalidated. Why? Because we have the breakout, we have the retest, your entry for the long, your TP number 1, and then we did not continue. We rejected. So you should have been stopped on the 5 minutes, on the 15 minutes right here on profits, all right? So what's happening right now? We're falling below our zero line. And guess what we got right here at 83,289, almost exactly the same point that you're looking at. And why are we looking at that? Well, look at this area here, right? Support, support, resistance, 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 support, support. So this is a big area of support and resistances if we start losing our dynamic reactor. So far, not everything is lost, but I will not be jumping into a long at this point in the 4 hours, at least not now, until I start seeing this V-shaped recovery somewhere lower around these areas, wherever that takes me. So basically, if I start seeing the flip of the ribbon and I'm already somewhere around here, I'll consider jumping in for a long here, or maybe a fake out bouncing to the upside. But most likely, we're going to go back and grab this liquidity right down here. If I start turning on my indicators here, well, then we'll see, first of all, oh, come on, where is it? There we go. That we have a loss triangle here. So basically, we have confirmed a breakout. So far as confirming, well, we need to wait for this candle to close outside this triangle, this rising wedge. But I think that's gonna be basically this is done deal, right? I don't think that we're gonna recuperate out of this. If we start taking a look at what else we have for all the way down here, you'll see that we not only have liquidity zones, but also look at that, we have low disparity, big areas of reaction. So smart money jumping in on that area, right? What else are we having here? Order blocks. Look at that. Two soft order blocks. One right through that trend line, and another one adding to the confluence right below that area. And finally, we also have. Let me see. Oh yeah, it was this one slightly moved than me, but still, as you can see right here, with a top limit at somewhere around 82 to the down limit at 81, we have another big order block, guys. The way that I have configured this order blocks, the volume profile bar magnifier order block by Jacob McBee, this is my catching a falling knife strategy indicator, right? So I usually when I see them, I pay close attention to see where am I going to be longing with the flip of the ribbon. So most likely, if we break this trend line, we're going to be jumping or we're going to be hitting right here. This area between 83 and 81. I know it's a $2,000 gap, but as you can see in the charts on the 4 hour, makes sense to overshoot somewhere around that area and then maybe have a big bounce to the dynamic reactor. And then we need to pick up our analysis and redo it because at that point, all of the charts are going to be just refreshing with new data. That's what I got on Bitcoin 4 hour. Let me, yep.
Oh,
Oh, let me just take a glance at the 5 minutes here really quick before I throw it back to you. We have a V-shaped recovery, and you guys know what I love to take a look at here, which is the Wyckoff. Where is it? The Wyckoff by Binance, right? Let me see if I can bring it out very quickly. And I believe I'm gonna be burning your pupils. So bear with me. No, I didn't. So what we got, and this is a tip, guys, that I have for you. Remember to early try to forecast it, right? Coming down, range, V-shaped recovery, high, not higher than the previous range. That gives us 70% chances of ranging. What are we seeing here? Range coming down, range, V-shaped recovery, high so far, not higher than the previous range. We only need to have a flip of the ribbon and not break this order block. If we do that and we retrace out of this, breaking this trend line right here, which I believe that this is just unsustainable, we already have 70% chances of ranging, right? So, guys, heads up in here. Trading a range might be very, very profitable. By the way, if you have not or you don't know how to trade a range, check out my video from yesterday, how to trade ranges. And they turn out to be as, or if not more profitable than trade the actual like big mover range. And the benefit, it is out of a range, well, you basically have known points for bouncing. So it's just like cheating. Much easier, much profitable. You got my strategy there. Go watch it. And also, hit a like while you're there.
Yep, smash the like button. Leave a comment over there. Check it out. He's basically talking about an in-depth breakdown on the hot dog bun theory that Alex O has. Guys, if you haven't seen that, you guys are missing out because it's great when Alex talks about his hot dogs and buns. So there you go. All right, so guys, if we're looking at all this GDP data, the macro data, but we're still calling for these lower levels to come in, despite hitting like support bounces and so on and so forth, right? Typical price action movement. What's the real underlying factor behind a lot of this pullback and this fear in the market? It has to do really with what we're seeing here from Donald Trump. This just came out overnight. And Michael Brown says, someone send the orange bloke off to sleep, please. Surely way past his bedtime. Donald J. Trump said, if the European Union works with Canada in order to do economic harm to the USA, large-scale tariffs far larger than the currently planned, will be placed on them both in order to protect the best friend that each of those two countries has ever had, aka the United States. So we are seeing here this the play out here still happening on all of these tariffs. Matter of fact, Kabisi Letter had a nice little section about it here, a nice little thread. Let's go in and break down what he's talking about. He said auto tariffs are here. If you guys missed it last night, 25% tariff on foreign cars. Auto tariffs are here. President Trump's Liberation Day will now include 25% tariffs on cars not made in the U.S. This is set to add up to $12,500 to the price of the average new car sold, but not made in the U.S. So why are the U.S. automakers crashing? Let's go down and look at it. It has to do with a lot of things, not just the cars, guys. Let's begin with some key details. These tariffs will impact both cars and car parts that are imported into the U.S. This means that simply assembling your car in the U.S. is not enough. The parts must also be produced in the U.S. to be considered fully tariff-free. This explains a lot of the confusion around Tesla. Tesla, which assembles 100% of its cars in the U.S. However, Elon Musk clarified below that many of the parts in which Tesla vehicles are not in Tesla vehicles are not made in the U.S. In fact, 60 to 75% of Tesla parts are currently sourced from the U.S. and Canada. This explains why many U.S. automakers have declined on the news. Ford, GM, Stellantis, Tesla, and other U.S. automakers source and assemble car parts in Canada and Mexico. Therefore, even U.S. automakers will be materially impacted by the 25% auto tariffs, among other tariffs. So they're going to be a massive implication. For example, cars in the UK's Cars are the UK's biggest export to the US, as nearly $10 billion per year is what they spend there. The White House estimates this will raise $100 billion of revenue for the US. Question becomes, who's going to bear the cost? We are. We are going to bear that cost. Matter of fact, we're going to have a 10-year treasury yield. That is the mandate of the baseline for your rates on your loan for the vehicle, your auto loan interest rate. And then on top of that, the car is going to be about $12,500 more, which means if you got your cars right now, you might want to make it last and expect higher repair costs, as those parts are also going to be on that tariff if that rolls forward. And because of that news last night, we did see some market sell off today. So despite GDP being, not horrible like they projected, it was still a slowdown on growth there. And then we get this tariff news on top of it. And April 2nd, very quickly approaching, that is going to be the date of the reciprocal tariff kickoff, April 2nd. So you guys are tracking. So let's see here. What do we got in the chat? I want to go check out the chat here. C90 for the win in the house. JR's in here with us. Appreciate you being here, brother. RS Miller, always happy to see you guys. Kyle Fields. And then we had keeping my 2021 Volkswagen. There you go, Zinzin. Keep that 2021 Volkswagen. I'm okay. I have a 2025 Genesis GV80 that I bought in September. It's got 2,000 miles on it because I don't go anywhere. And then to top it off, I traded Trump coin and did about a 300% return on 10 grand, and then turned around and flipped it into a 25x leverage trade when I realized it wasn't done, and paid off my car about a month ago. So Trump paid off my car. Thank you for paying off my car before you hit us with 25% tariffs. Appreciate you, bro. Darren Does Things says, bear the cross and the cost. That's it. That's it. All right, OC, let's go talk about some ETH. I know you want to talk about that, and then we're going to come back and talk about gold. So do ETH for us. Show us the ETH, and then let's get in on gold. I want to see what you're saying about gold, because gold right now hitting all-time highs, and it is not done. Gold's climbing as the Trump tariffs on the auto sector stoke trade tensions, and then Bank of America seeing gold rise to $3,500 as central bank and China are buying the shit out of gold. So I love gold in the chat. I saw it earlier. OC, let's go talk about ETH. I know you want to talk about it. The thing you hate the most is what you talk about the most also. Then we'll go and take a look at gold. What you got for us, bro?
Perfect. As we said, right, we have to confront your fears, ETH anyway. So if you don't know what I'm talking about, that is Fidelity. So Fidelity ETH, right. So going to the 5-minute chart, let's just get started in a low position here. We are in the same area that we're talking about with Bitcoin, right? We're coming down. We have a range. We have a tiny range in here. We have a V-shaped recovery. So at this point, I'm going to be considering this range as the range of Wyckoff, which means we should not be closing above this area here. Also, look at that. We're trading to maybe have that fake out here. So most likely we're going to be just making that movement here and there. So this is what I'm expecting, give or take. All right. Nonetheless, if we have the chance for ranging, we'll try to trade the range. In the higher time frame, let me just get rid of this spaghetti for now. And let's take a look at the 4 hours really quickly because we have an ongoing analysis. There we go. We are losing the trend line here. Oh, come on. We are losing the trend line here, right? And remember what I told you. I think that we could have a sweep of the lows in here somewhere around where we have these highs. Why? Because that at those highs, that's when we start seeing some support, right? At this point, we have a liquidity zone. Let me bring up support and resistances. Where are you, support and resistances? Well, and right here, we also have a predictive range and a soft order block. Let me see if I can plot my support and resistance. There we go. Well, they're slightly below at this point, but you can see that our first point of confluence, it is where we have this area right here, right? So that is going to be my first area for looking to a bounce up. I still think that we are on a breakout retest of we go. First area for bounce, right? And maybe first area for shorting it all the way down here. So we're still within the same plan. Analysis is still playing out as we were speculating. So far, this is ETH. So ETH, and passing it over to you, my friend.
You got that gold?
Oh, yeah, let's do gold. Sorry, I
Yeah,
forgot
let's
about
do
that.
it.
Let's do it.
Oh, see, come back.
Yeah, right.
Yeah, let's do gold.
Perfect. Let me just find it over here because let's just this here much faster. Everything, and then there it is. Oh man, why do I keep doing that, man? I look like a newbie. All right. So it seems like right here on gold, we were expecting the actual move to the downside, especially on the daily. Let's go back to daily and see what I was talking about. Why was I expecting this area right here for a drop down? Because we have previous weekly high. We also have a big order block forming there. So I was expecting a little bit more of downward movement. So far, we're still within the green area, but we can still go lower here by creating something like this, right? You see how we have one high, and then we have a secondary high, and then we drop back down. Well, then I think we could be forming something very similar or more like this, right? Where we do that goose head, and then we drop back down. So the goose head already played out, right? We're going downwards, maybe for a fake out here to create a lower high, right? A higher low, and that creates a disparity in the market. Also, plus a bearish divergence. I'm not telling you that this is going to happen for sure, but this is what I believe it's going to happen. I think we're going to get somewhere around 3,079, and then we're going to be flipping back to 2,956. In fact, this is where I might be planning to get some gold. In fact, let me pass it over to you, Piper, because at the beginning of the show, right before we started, I told you, you know what? Already I have a little bit of DCA money. Should I, and I asked for your advice, should I be just DCAing here or getting some gold? And your answer was
I said that I would wait with more cash. But if you're wanting to buy gold, I would wait with more cash to buy Bitcoin, me personally. I think that the returns on Bitcoin versus, $3,000 to $3,500, not that much of a move comparison to positioning yourself on Bitcoin from its market bottom to, even this last cycle. Everyone talks about worst Bitcoin bull run ever. It was still a 600% move. I don't think you're going to get that out of gold. So looking at the two, I would position more on Bitcoin bottom buying than I would on gold buying. And you can actually do that with the DCA Piper plan in our Discord, guys. All you got to do is be a member right here on our YouTube to get the Bitcoin DCA schedule. So every week I drop a chart. This is your DCA multiplier. Let's go check out what I'm seeing here on gold. Can I check a look at the monthlies? I'm looking at the monthlies here, and you can see going back here, this is like 2002 here. We can see that we got overbought on the monthly here on the oscillator. Here in 2006, we hit some overbought, and then we went into the 2008 scare. 2008, bam, that happened there. It had this big pullback here on gold from that point, from the top, from peak to trough. That was about a 34% pullback, and everyone thought gold was done. Gold's finished, and then check this rally out from that bottom, guys. Holy cannoli, holy balls, as Alexander G would say. That was a 181.9% move there to the top, and then we started to lose all of our stuff. Started printing all these divergences because we had a higher high without making a higher high on the oscillators, and then down we go into the cycle where we hit the quantum reactor band. Finally lost that here for a quick drop down into the dynamic reactor band, and then up it goes again. Let's talk about where we are right now, because you can see here we did have a monthly print of overbought, Guys, we printed the monthly overbought back in October, and this gave time for everything to kind of cool off. You can see here right now, the volume is just now really in the past 3 months starting to come back up, and we are far away from getting back into an overbought again, in my opinion. Right now, price on this thing has got a lot of room to move here on the oscillator. So I just wanted to bring that up. I did put the moving averages here, the simple moving averages on a weekly, so you can see that this 200-day is a key level for support on it. That's way down at like 2,000. But being that the oscillator is looking as strong as it is, and that everything's starting to curve back up here on the Oscillator Ribbon Pro, I think that this definitely has more upside. I don't think that $3,500 gold is going to be a crazy thing to see, because we're not overbought anymore, despite price moving up again. So, I think this is looking pretty decent right now, and I would not be surprised to see those levels move up to that $3,500. Let's jump over here and just throw gold here on my weekly setup and just see how this is. Actually, let's go to monthly and let's see how this is looking here on the MACD normalized and on the RSI prime in coordination with that Oscillator Pro, guys. We are very, very hot here on the oscillator, on the RSI prime, but you can see that in the past when we've had these levels, it has continued to cook to the upside for quite a while. So I think that once we hit, I think once we hit about 34.50, you'll start to see some heavy sell pressure just because of that $3,500 target, and people are trying to front run the short on it. So you might get a squeeze off of that. That pops us up to that 3,500. But looking right now at the oscillator, at the MACD normalized, this wave that we did back here that ran to this entire run up back in 2020, this is looking like this is curving back up again right here, and it does look like we could have the same setup where we came up, went flat on the MACD histogram, and then it did another pump. Well, same thing, we're going flat for another pump. So looks like gold on all of the oscillators on the monthly is giving us a lot of room to move, and get that upside move could be pretty crazy and pretty quick, especially when we take a look at what we're seeing here on the articles. Let's go. Gold climbs, says new Trump tariffs on auto sector stoke trade tensions. We already talked about that. Let's go to this one. Bank of America sees gold rising to $3,500 on central bank and China buying. Gold could hit $3,500 per ounce within the next 2 years, with central banks and China's insurance industry driving demand, according to Bank of America. Gold has gained 14% this year to break $3,000 per ounce for the first time, and as geopolitical tensions and Donald Trump's trade wars pushes some investors into safe haven assets. Bank of America now sees gold averaging $3,063 per ounce this year, and $3,350 in 2026. Of course, $3,500 coming in 2027. According to this, China's insurance industry can invest 1% of its assets in gold, which is equivalent to about 6% of the annual gold market, according to the commodity analyst. If they're only producing 6%, if they're only producing an amount that 1% of their buy-in is 6% of the entire annual gold market for the globe. That is a ton of gold that they're talking about buying there, and that type of buying pressure from one country would be pretty substantial to push us up to that level. Meanwhile, in the central banks, they're already holding about 10% of their reserves in gold and could increase that figure to 30% or more. Of course, when you have supply and you have demand, what happens? price goes up, right? And it shoots quickly. So yeah, $3,500, guys, is what they're talking about. But again, as I told you, OC, if I had to pick gold or I had to pick Bitcoin, with all of the nations, the states, the reserves, the federal regulation, the a popularity of it becoming a household term for people, I do think that I would much rather wait and poise myself for bigger buy-ins on Bitcoin than I would on gold. Because if you're talking 3,000 to 3,500 in the next 2 years versus, one cycle of Bitcoin being 600%, it seems like a no-brainer to me. So.
Absolutely. Right when you were reading the article, what you say, bank of what?
The central bank and China's insurance industry.
But you mentioned Bank of America, right?
Yeah, Bank of America is the one that projected that would be $3,500.
Absolutely. First, the Gulf of America, then the Bank of America. Now what? Mexico of America?
Well, Bank of America,
just
Bank of
kidding.
America is like
I
Chase
know.
Bank. It's just another bank that we have here. It's a
I'm just
major
being a smart ass,
national
man.
bank.
Just being a smart ass.
Hey,
So
keep it up, keep it up. We'll call Mexico America's basement. Okay, I'm just saying.
Hey, you already have called it backyard, so
The backyard.
not too
That's
far
right.
away from it. But
All
let
right.
me give you my perspective between gold and gold. Sorry for cutting you
Yeah,
off.
yeah. No, go for it.
This is basically what I was thinking. So we had a talk a couple of months ago, right? When we were seeing Bitcoin ranging, and we said, well, what's going to happen with altcoins? What do you think is going to happen? Well, I was, you know what? Maybe I could be looking at new projects, and you mentioned, well, maybe I could be looking at old projects or proven projects, right? Why? Because old folks that already have been in the industry might be betting for safer bets, right? And we saw that pushing over. So applying the same analogy, and I know it's a hard fix in here, so I'm just shoveling in, but my perspective is all right. So who's the old wolf in economy, right? What's happening with gold? We just keep pushing on gold. So I might be hedging Bitcoin with gold for the first quarter here or the second quarter to what? Just to make sure that when we start seeing the first reaction of economy because of tariffs, so basically negative reaction, I can get a little reserve. And then when Bitcoin's bottoms, I then just change my gold back to Bitcoin and then basically, sorry, go back up.
Yeah, I can see that. And just remember, all you guys need is the MVP oscillator. That's all you need. MVP oscillator for the win. If you guys have not seen that, let me go ahead and bring that up here for you real fast. For those that have not seen it, this is the MVP oscillator, and it's the only thing that you really need at all in this space. So let me go pull up that. Let me pull up the monthly on Bitcoin. I need the index. We're going to go to the monthly charts. There we go. And then let's go ahead and bring this up here, and I'll show you guys why this is the only thing you need. So if we come in here with the oscillator, we're going to go into our oscillator. It's on the monthly right now. Okay. We're going to go in here and we're going to put this on oscillator select, MVP oscillator. Put it over into gold until you start firing off your green candles down here, guys. That's all you need to do. Why? Because it's caught the bottom every single Bitcoin bear market bottom. So when this thing fires green candles on the monthlies, you can just start buying in every month, 10% in, and run with it. So nothing has caught the bottoms better than the Chart Prime's MVP oscillator, and that's where I will be backing the truck up and picking up a lot of Bitcoin. So yeah, if you buy your gold now, use it to hedge. Once you get your bottom confirmations, start moving it out of gold right back into Bitcoin and let it run. Me personally, I'll keep mine to some APY earning. I'm happy with some APY on my USDC, and I know you get like 14% down there in Mexico. So from some crazy exchange. So shout out to you.
But we also need to compare Mexican peso to US. So
That's true.
also
That's
when
true.
we get a disparity. Yeah. So it compensates. Yep. We are almost at the same base on valuation.
Yep, it is. All right, bro. What are you seeing on some other altcoins? Let's jump into those and let's talk about what you're seeing there.
Absolutely. Let's get started first with Litecoin. Let's do a little quick pass for all the base altcoins that we're looking at, right? So we're still within the same zone in here. Hopefully you guys did enter in this pullback. We were projecting this pullback yesterday. Something important. It is that we're forming an inverted goose head. We are on the red and we're bearish here, right? So we need to be careful. Something that is happening that may be giving a different vibe, it is this candle right here with absorption zone, right? But let me show you what happened on this candle. Where was it? There we go. Same absorption zone, short-lived run up, and then the next moving downwards. So just be careful if you're planning to jump in right now for a long. Your long was all the way down here where we projected it yesterday, right? And now I would be taking some profits. I will be just leaving 25% of my original position right in here, just in case we make the next movement to the dynamic reactor as we projected yesterday. But so far, this is looking like an inverted goose head, so we need to be careful on that one. The next one that I want to visit is ZEUS or ZEUS. Yesterday we gave an entry here. As you can see, we were expecting the first area of support was here. We have a position for a very, very risky entry. But the best area of entry was right here on previous weekly high in here, right? What were we looking for? A flip of the ribbon. Look at that. The flip of the ribbon basically already happened. Does it look like an inverted goose head? Sort of, right? But we bounce from a big support area. So despite this could still be an inverted goose head, which could be forming a dead cat bounce, well, then we can still, or we did actually, I will call this a lucky shot. Look at that candle, man. So, by the way, I did take TP number one, traded all the way up, and then on the way back down, this was my exit. Automated exit. I did not manually catch this. So good thing that I set up my trailing stop at that point. Man, when you see that thing, believe me, I still get the FOMO like I should have not used trailing, but that is a part of the plan. And when you're sleeping and you trail it, well, then it is better to grab a little bit more than then sometimes just get back and wake up at negative. So that's why we always use a stop loss, and also we use trailing stops, all right, when we go to bed. So that's what I got on ZEUS. Let's go back and take a look at OM in here. OM, BNB, and then I'll pass it over to you, my friend. So BNB in the same pattern. Everything is just waiting for a Bitcoin. If Bitcoin holds its ground, so basically if we range what we think we're doing, I think a couple of icons are going to be bursting to the upside. All right. The goose head in here is not really looking like a goose head, but I'm still waiting for a V-shaped recovery, right? Where is it going to be that V-shaped recovery? I do speculate that it's going to be at the breakout of dynamic reactor. I think this is going to be a big support. This is acting as a big support, but just like we mentioned before, or the Sheldon Cooper effect that Piper talks about, every single time he knocks, he knocks, he knocks until Penny opens the door, and maybe we could be falling downwards. So again, we're in a dangerous zone at this point, and I will only be longing it after we break through the dynamic reactor, come back for support, even if it's one candle retest, and then aim to our old target, 7.28. Finishing up with BNB in the same range. As you can see, we basically nailed it on that support. We're heading upwards to this area right here. I will still hold my position until I start hitting previous highs at 642. Move your stop to entry and then prepare for the retracement. Where is your retracement? I think it's very obvious. Where is it and where is it located? Somewhere around 647. We have a bullish divergence breaking through zero line. So if Bitcoin ranges, I think we could also be maybe having a little bit of a higher high than breaking and changing. Oh, it just changed it us. All right, each change. We just have a change of volume allocation. So what are we gonna be doing? Smart money entry here. Expect a further move. So man, we're just bouncing back and forth. That means there's a lot of allocation of volume. I expect volatility on Binance very, very soon. Other than that, turn it back to you, Piper.
Awesome. Appreciate it, man. Yeah, guys, at the end of the day, we're going to have a lot of volatility. I know JR just dropped the whole thing about how to use the VIX in our Discord, the volatility index to gauge, hey, is this going to be a good time to trade or should I just sit on my hands right now? As Alex O preaches every single morning on his live stream, trading is all about patience, right? And sometimes you just got to wait for those levels to catch up, right? So right now, guys, my personal opinion, until we get through April 2nd, it's going to be a very dangerous time to trade. Will there be opportunities to make money there? Absolutely, there will be, because volatility is going to exist, right? We're seeing that VIX already start to pump up there. Currently, right now, let me go check and see what the VIX is at right now. VIX is slowing down a little bit right now. So today might be a good trade day. But as that VIX starts to pump up going into April 2nd, we could see some big moments there where you want to just wait, look, find that confluence, good support levels on pullbacks or good rejection levels with multiple layers of confluence with your oscillators. When you see those levels, into your trades, set your stop losses, use your risk management, and make that money. That's going to be the plan between now and April 2nd, in my opinion. But that is about all we have time for today, guys. I appreciate everyone being here. Smash that like button. We got 76 people, and we do not have that many likes. It's about 42, guys. So we're going to need you to pump those numbers up.
Pump those numbers up. Those are rookie numbers in this racket.
Absolutely. You are right. So let's go ahead and do that, guys. Smash it up, and we'll be back here tomorrow morning. Don't forget to go pinned video here in the chat over there somewhere. Go leave a comment there on the Good Morning Crypto Show with BC Port Corp right here at Piper Academy, and be entered for your chance to win the Book 1, Book 2 series of the children's series for understanding Bitcoin for kids. So from the Billy Goat Tells team, go do that, and then this evening, I should say, catch OC live with OC Live, OC Trades Live, and then Matt Markets After Dark. Back tomorrow morning, Good Morning Crypto, and we'll be back at 10 a.m. Guys, until next time, trade safe. And as always, use some risk management. Guys, take care. Peace.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels fall low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, former Mexican spaghetti, yo. Crunch crypto with a deep dive to reject dime. And if you like the visual powered by Tar Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels fall low. Sound off to get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude!